technological efficiency. Essentially, this video is about the impact of technological efficiency on the financial markets. On the one hand, one can always think about efficiency as something that will be, in some cases, it does increase the transparency of processes simply because it requires more things to be accounted for these processes to become more efficient in the first place, and that this also usually involves the adoption of technology, so that the technological solutions that do enable great efficiency need also to be adopted, such as non-cash payments, such as maybe digital payments, digital currencies, things on that order, and there are not only benefits to that, which are usually promoted by those who are the beneficiaries, of course, but also the risks, and those can involve those who will be on the other side of the efficiency processes, and that could be about the ability to use the technologies themselves, such as maybe cashless payments for the elderly, or maybe the risks could be about the usage of digital currencies, of the crypto means of payment, and other crypto market instruments, so that on the one hand, then there could be intended risks, such as maybe the costs of the implementation of new technology, which can not necessarily be offset by the benefits on the economic scale or maybe on the company scale, and then there could be risks in terms of unanticipated risks, such as usually for the individual user, the risks of using a certain instrument, certain digital bet, digital crypto instrument, or whatever it may be, so that whenever there is let's say a higher level of technological efficiency, one can assume that will be an advantage either for the economy or for a company, but then on the other hand there could also be risks, and that there could be also significant pushbacks or resistances to that, so that one will have to weigh both I would say pros and cons of any process, any digital innovation promising more efficiency, but which may also have its either risks or let's say factors that will be slowing down its adoption and slowing down its eventual effect on the economy, on the economic performance. And in this case, I would say markets per se will be well advised to wait and see, and this is well illustrated by the digital, or let's say one can say also the digital innovation markets, such as Nasdaq, etc., which are highly volatile, and the same volatility can be observed in the crypto markets, which have historically been going through cycles of ups and downs, and it means that even though efficiency in itself is a good thing, economically speaking, such as in terms of let's say fiscal gains or transparency or economic let's say speed of transactions, etc., this will always be contributing to growth on the national economy scale or on the company scale, etc., so that any move to increase efficiency is always a good thing. But then one should also not be underestimating those who are left out of that process, and then what should never be too complacent about what efficiency can mean, as it can mean also certain sorts of risks which can only be seen or accounted for as the technology is being implemented, so that in the rearview mirror of sorts.